Hello, today the members of Foxtrot Group will walk you through our vision to pivot Expedia into a strategic position that will ensure long-term success in a market that has been overcrowded where price is king and switching costs are negligible. After an extensive analysis, our Expedia current position, we have identified opportunities for Expedia to maximize their competitive potential as the travel experience market changes. When we say Expedia, we mean Expedia Group, which operates many brands. The commonality between these brands is the key offering online travel booking service across many consumer segments across the globe. Because of Expedia's global reach, it pays to be clear about the market segments and the players in each segment of the value chain. Expedia's position is connecting the customers, such as travelers, tourists, and thrill seekers, with the suppliers, hotel, airlines, tour groups, and attraction operators. As we all may have heard, Expedia laid off 12% of its workforce earlier this year. This is a symptom of a larger problem. The travel industry is crowded, and frankly, competition and Expedia offering is not unique and not defensible from imitation anymore. Imitators are entering the market, and competitors like Google are repositioning as competitors. While the recent restructuring of Expedia is the good first step of reevaluating the internal efficiencies, Expedia must also put focus on suppliers to enhance the value added by Expedia in order to increase barriers to entry, prevent imitation, and continue growth. The focus must put Expedia in a much more defensible position, as we shall see.
But first, let's highlight some important takeaways from Expedia's current strategic position. Shown here are all the elements of the strategy diamond, including arenas, staging and pacing, economic logic, vehicles, and differentiators. While we're not going to discuss each of these in detail, we do want to point out a few key aspects to keep in mind through the rest of the analysis and recommendations. First, the economic logic is built around returns generated by offering convenience to both consumers and suppliers of travel experiences. Second, Expedia's scale is a major differentiator that empowers them to leverage an enormous amount of consumer information and meet a wide range of supplier and customer needs. And thirdly, an important vehicle is Expedia's internal development of new products in-house, and then expanding in more and more consumer access channels. Let's keep these key positions in mind as we talk about our analyses and our recommendations. Let's first examine a few differences in how Expedia generates revenue compared to its primary competitors, Booking Holdings and TripAdvisor. Shown here are the 2019 spending data for Expedia, Bookings, and TripAdvisor in the categories of selling and marketing and technology and content, which primarily consists of information technology. Booking Holdings spends much less on IT relative to competitors, but spends relatively more on selling and marketing, most of which is performance marketing, the type of advertisement that the firm pays Google for to prioritize their search results and list their particular offerings. Expedia's statements do not break down their marketing expenses with as much detail, but because Booking Holdings spends so much more on selling and marketing on a relative basis than Expedia, it may very well spend relatively more on that specific performance marketing component. And if this is true, Google's intrusion into the online travel booking industry may have a disproportionately negative effect on bookings as compared to Expedia.
A dominant factor to travel industry are the social factors because they create the decisions and values of your next vacation. Social factors are outweighing the travel decision making by Generation Z and millennial customers. In fact, 50% of Americans prefer to spend their travel dollar on experiences that they would describe as informative. There's a 12% growth among these fast-growing travel demographics for specifically spiritual, religious, social conscious travel, and outdoors. In fact, some regions like Nepal and North Africa have shown sustainable growth of 32% per year in the last 5 years. Suppliers in these regions are relatively unsophisticated when compared to traditional travel locals. Suppliers struggle to adverse, connect, build trust, and coordinate with travelers to create the best experience. Despite this, demand is growing. In Porter analysis, we factor the industry as a whole to determine profitability and competition. Potential entrants create the moderate to high barriers of entry as Expedia's brand loyalty is considered low due to the customer searching for the lowest price. Bargaining price power of suppliers is moderate because Expedia depends on the supply chain of suppliers of airlines and hotel industries. The buying power is high because the buyers is considered high that indicates the customers are getting high quality service and product at affordable prices. Threats of substitute, Expedia depends on their supply chain as it's commoditized the online booking agencies. The complements are firms such as Google and Airbnb that are often the first point of contact that a customer uses when planning a trip. Overall, competition will increase as technology develops for a more personalized and intuitive travel.
After conducting an internal analysis where we looked at factors such as the inbound and outbound logistics, production, marketing and sales, etc., we get a clear picture of what value elements Expedia offers. The major takeaways from this internal analysis can be best summarized by breaking down Expedia's offering into 5 key capabilities. These offerings and these resources provide a key insight on where Expedia can enjoy a long-term competitive advantage and successfully increase barriers to entry for potential substitutes, direct competitors, and imitators. On the screen now, you can see what we broke these 5 key resources into. Pay special attention to factors number 3 and number 5. When we take these 5 capabilities and rank them in what is called a VRIO analysis, where each item is assessed in terms of their value, rarity, imitability, and how well Expedia exploits these resources, we get some interesting outcomes. This analysis is useful because it allows us some insight into our original problem statement. How can Expedia best position itself to counter potential threats and prevent entry or the growth of rivals? For example, while number 2, creating advertising leads, is useful for Expedia partners, this isn't something that is hard to imitate or find substitutes for. While Expedia can enjoy an offensive advantage in this position, this should only be viewed as a short-term advantage, while that will decrease markedly as rivals and vacation suppliers themselves become more sophisticated. What jumps out after this analysis is our niche supplier-side services, because there's a relatively untapped market that we are evaluating as a growth market and provides opportunities to instill high switching costs. Rapid data aggregation, analysis, and distribution also score extremely high because very few players have as much access to data relevant to travel than Expedia. This is tied to its market size and the ubiquity of the back-end processes on the Expedia Group platforms. This is a hard asset to imitate, and our recommendations are going to lean on this asset for long-term victory. Now that we have explored Expedia's strategic position, their external market factors, and the key internal capabilities, let's focus all of this through the tried and true SWOT analysis. What are the key takeaways? 1. The sophistication and huge scale of connections between suppliers and consumers on the platform is a key strength for the Expedia Group. 2. This puts Expedia in a good position to expand this platform into other product segments. 3. On the other hand, the competitive landscape is getting intense, and the core products that Expedia Group offers simply aren't enough to delight customers, and they're very easy to imitate. And 4, we have an obvious short-term concern such as the COVID-19 pandemic, as well as the threat of new entrants from key value chain members such as Google, which drives most of the traffic to Expedia sites.
Based upon our analysis, we see 3 recommendations for actions that Expedia can take to address the core problem statement. They are 1. Create a supplier-focused business platform, 2. Create customer-focused platform offerings, and 3. Create operational efficiency through consolidation of services. Some of these options address those key capabilities that we categorized as paths towards long-term victory, as we soon shall see. Let's start at first with the supplier-focused business platform. A supplier-sided platform focuses on the hoteliers, rental places, attraction owners, and event curators that have a lot to gain by leveraging the Expedia platform. While Expedia currently offers supplier-focused tools to help manage inflows and outflows of customers, there's a lot more opportunity to expand and integrate the Expedia platform and Expedia's wealth of travel data with suppliers. Expedia's current position is favorable for building tools that suppliers will be attracted to because Expedia's data analysis can provide operational insights and market opportunities that these suppliers could not achieve on their own. An Expedia platform that performs more administrative and technical aspects of supplying a travel experience empowers suppliers to grow quickly, and Expedia will grow with them. As suppliers use the platform, its value grows, which increases switching costs. Likewise, it also creates a differentiator that is defensible from imitation because it leverages the data earned via Expedia's vast information network. Suppliers on a more robust Expedia platform can receive real-time traveler data, making for a seamless, less expensive experience for the supplier and a better experience for the customer. In order to be supplier-focused, Expedia needs to reevaluate their technology stack to ensure maximum optimization. First, they need to make sure that all suppliers are directly and seamlessly integrated with the Expedia platform. The best way to do this is by turning up a direct integration between each supplier's back-end system and Expedia's core platform. By eliminating as many third parties as possible, Expedia can ensure that they have the best, most up-to-date information from their suppliers, which in turn gives Expedia's users the most parity when they leverage the platform for their booking needs. Next, they need to make sure that their systems are distributed properly across their global data centers to ensure maximum scalability and capacity while ensuring as minimal latency as possible to each and every one of their systems. If Expedia is hosting their own systems instead of co-located spaces, they should consider moving to an all-cloud or hybrid cloud option to maximize their flexibility at the lowest investment possible. The bottom line is that Expedia needs to make their platform incredibly attractive to suppliers. They will accomplish this by creating a platform that allows data integrations to be easy for suppliers to leverage. At the same time, Expedia is making it easier for larger suppliers to get on their platform. They need to provide smaller suppliers with unique tools that they, one, cannot get anywhere else, and two, are pivotal in helping them run their business. This creates overall value for everyone on the platform, making Expedia enticing for all suppliers, no matter the size of the company or volume of their business. Expedia can capture value by reducing costs of suppliers, reducing fixed and B2B business costs, and creating value through better customer satisfaction. Coupling this with increasing switching costs and justifying commissions, Expedia will successfully protect against imitation in the market. While Expedia is focused on creating a supplier-centric platform that will continue to attract all major players in the travel and hospitality industry, they also need to work on their customer service and customer-facing offerings. The travel industry is now coming full circle back to where travel agents dominated the market, but it is being done on the digital stage instead of in person. Building upon this and supporting the move by Expedia to continue to improve upon and offer enhanced services for their customers, a platform providing classes that are aimed at enhancing a trip's value is something that is simply not done in the industry today by a company like Expedia. It is probable that given the amount of bookings and traffic that Expedia has to its website, the consumer-focused service would be highly leveraged by its users. Expedia is great at booking trips and experiences and has been explored above, but the buck stops there in terms of value added for that specific trip. On the flip side, when a trip is booked with a travel agent, the agent generally continues to provide travel support services and recommendations throughout the duration of the trip in order to make sure that the experience continues to be what it was intended to be. By providing a similar service, Expedia can not only give their customers a feeling of attentiveness and care, but also generate additional revenue streams that follow from follow-on recommendations based on the current status of a user's trip. Examples of potential recommendations are Lovegraph, that arrange photographers on the fly for scenic settings, Spotted by Locals, which brings an entire crowdsourced things to do application under the Expedia umbrella, and Goose, providing travel services in less than 60 seconds. While these customized recommendations may increase coordination costs and potentially provide uneven offerings, it has excellent synergy with the large Expedia customer base and will drive increased customer WTP through the partnerships that Expedia leverages on the platform. Throughout the history of the Expedia Group, the firm has made consistent efforts to acquire and launch new brands across different regions and segments in the travel and travel services industry. However, as they have marched down this path and continued to grow, they have not focused on consolidating new brands into a smaller number of more focused, recognizable brands for the Expedia Group. It seems that Expedia has pursued growth as its own desired end state while keeping many of the brands in place post-acquisition. This creates layers of excess infrastructure, resources, and human capital that Expedia can shed as a way to increase customer responsiveness and reduce costs. The group needs to continue to stay competitive in their industry, which means optimizing everything, creating as many efficiencies as possible, and eliminating pain points both internally for their teams as well as for their customers. By consolidating services under single brands and focusing on making those brands the best they can possibly be, Expedia will realize competitive advantages that they have not been able to see up to this point. Although this effort does not differentiate the service from the competition and does not protect Expedia from imitation and competitive pricing, it reduces overhead, allows them to have an easier time building brand commitment, and reduces R&D and marketing costs. In order to mitigate these risks, Expedia needs to create brand loyalty by expanding its rewards program and offer favorable commission rates to its most effective supplier partners. Expedia needs to make sure that they create a defensible core, build high barriers to entry that protect their business model, and ensure their future growth and stability. Right now, the travel booking industry is at risk to new entries, but is also dominated by the largest players on the market. If Expedia can differentiate their offering compared to the rest of the competition, they will create an enticing platform for both suppliers and customers, guaranteeing their future as a leader in the travel services industry. By creating a supplier-centric yet customer-friendly portal for all travel booking needs, coupled with premium add-on services mentioned in our 3 specific recommendations, the group will be able to refocus efforts and set themselves apart from the rest of their competitors.
So let's go back to the problem statement that we discussed at the very beginning. We've shown how a supplier-focused pivot for Expedia can address the factors that drove the problem statement in the first place. It addresses the like-for-like competition by providing scalable services that add value for suppliers and continue to delight customers. It increases switching costs for suppliers and can actually provide long-term cost savings for suppliers and customers. Expedia will capture this cost savings. And this focus is applicable to the current revenue sources, namely hoteliers, and provides those important frameworks to begin expanding into these new beachhead markets which are experiencing rapid growth. Expedia is uniquely positioned with their size, saturation, and data competencies to provide a product offering that is currently unavailable and unapproachable by the competition. Thank you.